For record numbers of Australians struggling to keep up with their mortgage repayments, it's all bad news.
Seriously, I mean, are you calling a real change in market behaviour?
I think there's a risk of a recession in Australia.
This version of the grey Australian dream is just a facade. Nowhere is mortgage stress being felt more keenly, and the figures are staggering. 1 in 50 families are at risk of losing everything.
Hi everybody, James Bradley here at US Invest. Look, what if there was a way for the average income earning Australian to become financially free in less than 7 years? Now, that's what I said, 7 years, less than 7 years. Now that's without, of course, breaking any laws, first and foremost, or getting involved in any type of get-rich-quick schemes, or signing up to any type of pyramid schemes or network marketing companies. It's all with very little work on your part, so you don't need to be an expert, you don't need to get a new job, or you don't need to spend hours away from your family or friends for this to work. It's simple stuff. It doesn't require any form of college education, and I know this because I left school at 14 years old and became a multi-millionaire from this very system that I'm about to show you. Okay, look, so probably sounds too good to be true, right? Well, look, in the next few minutes, I'm going to give you the keys to the safe and show you exactly how to do this for yourself on this video. Okay, now to safely become financially free from all bills, money worries, the only way that I've ever seen this actually work long term is real estate. Everything else that I've been involved in over the years, they were just too volatile. Unless you had a very strong education in that field, it's not to say that you can't become wealthy through owning a business, which of course can be profitable, or trading the stock market. But those type of things require a lot of skill and a lot of education. People make mistakes, and one tiny mistake in any of those areas, they can send you completely broke. So look, here we go. I'm going to teach you in a very safe way how to become financially free, like I said before, in less than 7 years through smart real estate investing with very little money upfront required on your end. Now, I said very little money, however, it does require some money to get started. You can't buy real estate for free nowadays. So if you are flat broke, and with zero money to invest, this strategy is simply not going to work for you right now until you do have a little capital. We have other strategies for people with only a little bit of capital, but right now, this particular strategy won't suit people that don't have the money. Now, the true beauty of investing the right way is it will make you money ongoing without you needing to lift a finger. Right? It's like turning your money into little mini employees that will go to work for you day and night without asking for any pay, without asking for any vacation time. All right? But look, we've also all heard the horror stories when it doesn't go as planned and when investing goes the wrong way. So we need to make sure that, especially for investing in real estate, we got to make sure that it's a rock solid investment. And I'm going to show you how to do that right now. Now, when it comes to making big money from investing, you need to be able to time the market. And look, that might sound tricky to any of you guys watching this, but trust me, this is about the most simplest thing in the world to do. And like I said before, I left school at 14 years old and became a multi-millionaire through investing in real estate. So education, where you live, where you come from, past investing experience, it has absolutely nothing to do with this. The first thing that you need to understand, the first thing is that all markets move in cycles. Whether it be the real estate market, whether it be the stock market, even if you're investing into things like pig's ears or barramundi farms or gold, it doesn't really matter. All of them are moving seasons, or what we call cycles. After summer comes autumn, right? After autumn comes winter. After expansion comes what? Contraction. Right? This has been happening for centuries, so I promise you it's not going to change. Right? These are fundamental laws of the universe. Everything moves in cycles, especially financial markets. If you go back over time, the last 300 years or so, every financial market moves in a particular cycle. Now, the image on your screen is a simple to understand graph of exactly how a market cycle looks. It starts with the green section, which of course is the smart money. These are the guys that are in the know very early on, the savvy investors with their ear to the ground. Then, of course, that fuels the institutions to get involved with. That's when institutional money comes in, or better known as the guys on Wall Street, big financial houses. They join in, they get a piece of the action early enough on, and then, of course, that fuels media attention. Then comes Joe Public, or what we call the dumb money, which then sends the cycle into orbit with a false sense of economy, and eventually it pops and comes back to where it should have been all along. That's basically your standard market cycle. It could be 30 years, it could be 100 years. Generally speaking, it's about 30 years. Take Facebook, for example. Early investors in Facebook are now all multimillionaires. In fact, most of them are billionaires. And they were what we call the smart money. Then along came the big institutions who poured in a lot of money to help Facebook get to the next level. That got the media talking. These guys also made a fortune off Facebook, but finally came the day where Joe Public could get involved in Facebook when they released their shares in their initial public offering in the stock market. And unfortunately, you know, the bubble popped right there and then. A lot of people lost a lot of money on Facebook. All right, the shares lost 1/3 of their trading value in the first month. I mean, it's sad, but that's what can happen when you're not educated, when you weren't in early. Okay, so that's what you've seen happen to Facebook. Now, however, they've since turned around, of course, and climbed past where they initially were offered at, and they're now worth double that price, double the $38 that they were at. This is a classic cycle. People that got in at the wrong time lost a lot of money, but people that got in at the right time made a lot of money. So it's all about timing. Imagine how much money you could make, honestly, in real estate if you time the market correctly. Well, I'm going to show you how to do that right now. Take Australia's real estate market for, say, the last 30 years. It's been a great property market, but, you know, is it the right time to invest today? Well, you know, let's look at it overlaid on a market cycle. Let's see where Australia is in its market cycle. Now, if you have a look on the screen right now, you'll see, you know, Australia is at the top of its market cycle. It hasn't had that big correction that it needs to have, so, you know, it's not too good. Next thing we need to do, guys, is we need to not just take the chart as the end all and be all. We need to turn to the experts, the people who've been in the industry for a long time, and see what they have to say. So let's turn to those guys and see what they're looking to say.
One of the risks, and it must be a political risk as well as everything else, is a bursting of the housing bubble in Australia. How likely is that?
Look, I think at some stage it is. We simply have a very expensive housing stock.
Be interesting to know whether Steve stands behind his well-known forecast of a 40% fall in house prices.
I do. I'm still sticking to it. We've had a house price bubble in this country like everywhere else in the world. They ultimately burst, and when they do, you see falls of that magnitude.
What do you say to the fact that people out there, after reading you, think you're saying there's a housing bubble, beware, beware?
I think it's a very good thing. I think that anyone who's not anxious and exercised about the fact that house prices in Australia are growing at more than 3 times the rate of wages.
Especially for Australia, as opposed to the United States and other countries in the last housing burst. There's a vicious cycle. Commodity prices have been declining since 2008, something, a 30-year cycle we've had that we predicted a long time ago. I've studied bubbles, every bubble in history, and every time a bubble comes anywhere, gold, stocks, housing, they always say it's different this time, and this is not a bubble for these reasons. Every bubble in history is burst, and I'm saying China's got the biggest, and that's going to trigger your bubble. And even without China, your real estate's so high, it has to come down in the next few years.
My very simple take on it is, the bigger the bubble, the bigger the pop. We have very expensive house prices, and I suspect they're going to fall at some stage.
Okay, so look, if we want to buy real estate and Australia is not a good option, we're going to have to look globally, because the real estate market does move in cycles, and there is parts of the world where it's good. So let's look at America's real estate market index over the exact same period as Australia's, and let's overlay it, and you can see quite clearly right now America had the same great run for 30 years as Australia, but of course now America's bubble has popped. It's gone back down to 1980s prices. It's stabilized itself. It's coming back through the smart money zone into the institutional money zone. So right now is a great time to invest in the US property market. And again, but just because the chart says that doesn't mean that that's the right thing. Let's turn to the experts, the people in the know, and let's see what they have to say.
Five years after the collapse of the U.S. housing market, Americans seem ready to buy again. Pending home sales are up 7% over last year, foreclosures are at a 7-year low, and the number of homes for sale continues to decline. Sam Coffin is an economist at UBS Securities.
The housing sales numbers are continuing to trend up. In fact, if anything, realtors are saying they're looking at shortages of inventories of homes for sale.
The recovery is for real, and we're seeing stronger price increases in markets with stronger job growth. And that's strong evidence that, at least in many markets, not everywhere, but in many markets, that strong job growth is really driving household demand, which is helping boost prices.
Well, housing actually looks pretty good to me now, from here going forward. Mortgage rates are way down.
If I had a way of buying a couple 100,000 single-family homes and had a way of managing, the management is enormous, is really a problem because they're one by one, they're not like apartment houses. But I would load up on them.
Okay, look, so I told you how I was going to show you to become financially free in less than 7 years. Here it is, step by step, right now. So just grab a pen, please. If you have one, if you don't, that's fine. Just listen in. You'll hopefully be able to replay this and hear it over and over. Now, let's use a number like $300,000 to begin with. Now, if you can't access this type of money, whether it be through the bank or, you know, through your equity in your current investment properties or your current property you live in, or in cash, just divide down the number of returns that we're talking about by the number that you can afford. And of course, if you have a lot more money, which a lot of you watching this video do, just multiply the number up. Okay, we're using 300,000 as an example because we found that the average Australian investor, you know, can access that amount through their current investment. So that's the number we're using as a round figure. Now, if we take that $300,000 and we use it to bring it to America first and foremost, okay? We obviously can make money on the currency transaction, but let's leave that out of it for now. Let's just bring the 300,000 here, use our basic exclusive finance product. We do have, of course, better options. This is a 30% down option or 70% LTV. We've better options, but for the purpose of this example, I want to use our most basic finance. That's going to get you 300,000, 30% down is going to get you $1 million in American real estate. So say you buy 10 homes, right, at $100,000 a pop. Now, these $100,000 homes are going to be like an $800,000 home in Australia, beautiful 4-bedroom mansion. You're going to get around $1,100 a month in rental income. So that means if we've got 10 properties, that's $11,000 in rental income. Now, after you deduct out all your monthly fees, like your taxes and your property management, and you pay off your mortgage because you got your principal and interest for that $700,000 loan, you're going to be left with around roughly $4,000 a month in positive cash flow coming in every single month, which is a beautiful thing. Now, you're never going to get that in an Australian investment property. Now, look, we've two options at this point. Option number one, we got $4,000 a month. You know, that's $1,000 a week. We can just take that, enjoy it, and, you know, pretend to be financially free, but we're really not. And that's not going to make you financially free. I'm going to be honest with you. Not the average Australian. Here's where we get smarter. We take that $4,000, we use it to pay down the loan faster. With rents increasing year on year by roughly 3%, we're going to be able to pay off all 10 properties in less than 7 years. Now, because the rent goes up around, like I said, 3% a year, we're no longer getting $1,100 a month in rent come year 7. We're actually going to be getting around $1,350. Again, spread across 10 properties, that's $13,500 a month coming in for you into your back pocket without you lifting a single finger. Your property manager and US Invest takes care of everything, and you sit back and enjoy the profits and do what you want to do with your time. Now, look, here's the kicker. We bought these properties for $1 million, right? 10 properties, $100,000 per property. In places where we buy properties in like Atlanta, Charlotte, Texas, properties are growing in capital appreciation by anywhere from 10 to 15% a year. Some places even stronger than that, but just using conservative numbers, growing by 10 to 15% a year. So imagine if you have $1 million portfolio, that's going to be worth over double come year 7. So just call it a $2 million portfolio now that you have, but you own it outright because you paid them all off. So now you have a $2 million in property, plus you're making $13,500 a month with no mortgage to pay. All because you made a wise decision today and invested in your future. For the average Australian, having a $2 million portfolio of property, $13,500 a month coming in. However, some of that will be used to pay expenses like property management and taxes. So call it around $9,000 to $10,000 a month positive cash flow coming in. To most, that is financial freedom. Now, imagine what we could do personally with a company with a $2 million property portfolio, because we were able to do that out of a $300,000 investment. So now you've got $2 million. Imagine if you actually geared this and worked it a bit harder, how big your financial freedom could be. But that's just our basic, simple strategy that I'm sharing with you on this video because we don't have a whole lot of time. So picture, like I said, an income stream of that magnitude that not only lasts your lifetime, but more importantly, lasts that of your children's or even their children's. And that's generational wealth. Plus, it's going to give you all the time freedom that you need to do the things that you want to do and enjoy your life. So look, if that's of interest to you and you want to learn more about how we can even gear that harder and make even more money through simple strategies that US Invest uses, call the number below on the screen, chat to one of our team who are standing by to take your call. Now these guys, they're going to show you exactly how to do what I've been talking about for you and your family. So please take 5 minutes out, give us a quick call. We'll have a chat with you on the phone and hopefully we can take it further from there.